Hey guys, good morning. It's Tony. So I just wanted to go a little bit into the S&P 500 and where I think it's coming for this upcoming week, and where I think we're gonna be at with CPI, in case we get certain numbers and stuff, right? And if you haven't joined the Patreon, I'm gonna join the link. I'm gonna drop the link in the comments below in case you would like to join, to get like my indicators and to get in the chat, which is super fun, by the way. I love just talking to everybody. But I made this chart. The ES2 is a variation of a few of the futures for the SPX for the SPY. So I'm going to be using this one just because to keep it extremely clean, right? Right off the bat, if you guys saw my last video, you guys know that I'm still very bullish on the market, right? I'm still very bullish on this market. I'm not bearish at all, not yet. We do have this really big trend that started back on, July 14th, which is essentially almost a month ago, right? If this trend actually breaks, I do expect us to go all the way down, possibly back to under $400. But the big picture here is CPI. CPI last month came out to 9.1%, right, which is essentially the highest inflation that we've had ever. And the market, for whatever reason, thought that that was the bottom, right? That's essentially why we've had this huge rally, ever since, that CPI report was announced. I don't know, somewhere around this area, right? I forgot when it was on, like July something, right? July 10th, like somewhere like around this area, it was announced, and then boom, we just skyrocketed from there, right? So again, market thinks that CPI 9.1% was bottom, right? If we do actually get under 9.1%, that gives the market a huge reason to run to the upside, right? A very huge reason to keep running to the upside. But if we have anything over 9.1, I think that gives the market a lot of reason to tank extremely hard, because everybody thinks that the market bottom is priced in because 9.1% is the bottom of inflation. Again, I don't have a very good forecast for CPI, so what I like to do is essentially just wait and see what's gonna happen. Probability says that we're actually gonna come out higher, right? Every single month we've actually been higher and higher and higher and higher. So if I had to take a guess, I'd say we're gonna go up higher, right? I don't think 9.1% was actually peak inflation, right? It's just probability, right? If next week actually comes out under 9.1%, then I think it gives the market every reason to rally extremely hard, right? And I think 430 is basically guaranteed. If you saw my SPY video from 2 weeks ago, I basically said I think the bottom is in. I think we're going to 420. Which almost hit, right? We're basically, I think that we hit a high of 419 on the SPX. So I was about $1 away of my forecast. I think I released that when SPY was at like 385, 390 or something, right? My last video was like 2 weeks ago for SPY. So target hit, right? Or almost hit. I was about $1 off. And my target range was 420 to 430. But I think if CPI actually comes in at under 9.1%, I think you have every reason to run to 430. I think 430 at that point is kind of guaranteed. As long as this trend doesn't break, right? As long as this trend doesn't break, I think we have every reason to rally towards 430 and even like 440. If CPI comes in at under 9.1%, I think the rally can go extremely higher. I think we can hit what is this, 457, like 450, like 455, 460 ish. I think if CPI comes in at under 9.1, we can definitely have another very similar rally like we did here, right? So this we had from lows to highs. Our rally pushed what? In 21 days, we did $44. God, that's absolutely freaking bonkers, dude. So we can kind of do something similar, right? So we'll do 21 days, $44. Yeah, it's around that range, right? Around that 455 range. Like I think we can have a very similar rally to this. After CPI comes out under 9.1%, which would basically take us somewhere in this range right here, right? Somewhere in the range of like 440 and 460. But I think 455 is more of a probable target. But if CPI does come in over 9.1%, I'm fully expecting us to drop. It shows that, the market was wrong. Inflation has not peaked, and that gives the market every single reason to tank extremely hard, right? And if that's the case, then I think we do something like this, where we drop all the way back down to 393, and then from there we make another decision, right? Because essentially what's happening here is we're just range trading on the S&P 500. If you see this, right, it's basically just range trading, right? So we hit this range, something bad happens, and then we come all the way back down to here, right? If we have more bad news, then something happens, we come all the way back down to here, right? Essentially what's happening is just range trading. Like if we're having really, really, really solid, really solid news, everything's gravy, we're going to continue this trend, right? We're going to continue this trend right here. Continue this trend all the way here. And if I had to take a guess, right, if we stick on this trend here, I'll tell you guys exactly when I think we can hit that. What is it? The 455. Let me just make sure this is good. There you go. So, latest, right? The latest that we can see a 458 would be by September 1st, right? Because it would stay on trend. If it decides to stay on trend this whole way, the latest that we can see 450, 460 is September 1st, right? So immediately, if you're bullish on the market, I think we're going to stay on trend, which means that latest, that it'll touch, 458, 460 is September 1st, which is kind of insane to think about, that in 1 month we can possibly rally another like 40 points or so. It's absolutely insane, but I think it's doable, especially if CPI comes in at under 9.1. But if it does come in at over 9.1, I think we can really just break trend and come all the way back to 393. And I did want to show you guys the NASDAQ 100, right? Because yesterday I did come out with the video that said, if this is the top, if we are having a top, this is it. And because of that, we actually have really solid bearish divergence right now, right? And essentially how I trade this is, you're on the third touch, right, of a trend, of a major trend on the daily. That retrace is anywhere between 0.5 and 0.618 on the fibs. The 50 is under the 200. Oh, sorry. Which is this red line here. So this red line is under the 200 line, the 200 MA, and stochastic is on top. I'm basically just giving you guys the way that I trade, and use the trend fibs for a forecast. This is a trade that I would take every single time. I'm actually in NASDAQ short right now. So this has an extremely high rate of success. Divergence is, it doesn't happen often, as you can see this, right? So, you would have, this trade started in December, right? You wouldn't take this trade till August, which is 6 months later, 7 months later, which is the bad thing. I love divergence, right? Love divergence. But this is a trade that would have taken 7 months to set up, because you would not take it on that second trend touch, because there is no trend yet, right? You would take it on the third trend touch, which is right here. This is essentially a perfect bearish divergence trade to the downside, right? It's perfect. If the market tanks down, another 25%, this would be the exact top. If we don't tank and we actually break this, we're probably going to run up. The market will probably run up another 15%, right? So you're at a very critical point. And also if you want to look at the dollar, the dollar actually just closed a bullish day, right? Dollar, as you guys can see down here, we just closed a perfect entry on the bull side. Last time that happened was right at this level right here, right there, right? We were on trend, then we pushed up how many points? 101 to 109. So we can see another $8 push from like right here. So right, 105 to 100, and so roughly target would be somewhere between 112, 113, somewhere around this area, right? Which we can actually change that range somewhere like right there, right? Which would be an extremely huge push to the upside, right? Because last time, what is it, July 14th? Where was the SPY at July 14th? July 14th, we were right here. July 14th, we were at 375 when the DXY was at highs. So if we manage to run that big draw, for DXY to hit $113, the dollar index to hit that high. I think we can easily drop back to 390. Easily drop back to 390. So, everything right now, again, all TA right now, the S&P 500 right now, TA is looking very bullish. Everything else is extremely bearish. You have the DXY looking really bullish, which is really bad for the market. And you have the NASDAQ on that perfect daily divergence, which is very bad. Another way to really see what's going on also is, you have Bitcoin and you have, Ethereum. Where are these guys going? Are they leading the market, right? The only thing that I don't like about Bitcoin and Ethereum is you're probably going to close a weak bear on the weekly, right? Which kind of signals a little bit of weakness in the crypto market, right? It's kind of an early sign of, hey, this might actually be the peak, right? And right now, I think we might actually have a little bit more wiggle room to the top, right? We can probably have a little bit more wiggle room to the top before dumping, because the stochastic is right on trend. So I think we can possibly go to, I don't know, something like an 1800 again, maybe $2,000, 1800, 1900. What is it called? 1800, 1900, like right here, before dropping really hard, right? But we need this to actually, stay consistent, stay strong, because as soon as we start seeing some weak movement on the week, that's pretty significant, right? So as long as we don't create a yellow candle on the weekly, I think we're still perfectly fine. But Bitcoin and crypto is a really good indication, usually, of where we're going. For the market, right? Bitcoin and Ethereum are usually a really good trend of what's going on. But again, it's kind of hard right now, because Bitcoin does look like it's on a trend to the downside on the 4 hours. So again, everything looks extremely bearish except for SPY, and I have no idea why. SPY looks very bullish. Right now, the chart for SPY is very bullish. Every other chart right now is basically saying, hey, you want to short the market right now, because it looks like we're going to go down super hard. And I'm going to stop the video here because I feel like I'm rambling a lot. So I'll stop the video. But, everybody, I think that I still think I'm still very bullish. I'm going to wait for CPI, and then we'll kind of go from there. But it's just weird that the whole market is bearish, especially with TA. And SPY is the only thing that's saying, like, hey, don't keep longing me, while 95% of the market TA is saying, hey, it looks like we might have another drop to the downside. I'll see you guys later. Bye-bye.